Welcome back to our weekly market wrap-up. Indian equity markets witnessed sharp declines this week as rising geopolitical tensions and trade frictions dominated investor sentiment. So stay tuned, and by the end of this video, we'll unpack the key drivers behind these movements and what lies ahead. This week, the Sensex fell 1.0% to 80,599, while the Nifty slipped 1.0% to 24,565. The mood soured following the US announcement of a 25% tariff on Indian goods starting August 1st, reportedly in response to India's defense engagements with Russia. This triggered fears of a broader diplomatic fallout, overshadowing positive domestic cues and corporate earnings. The broader market fared worse. The BSE Mid-Cap Index dropped 1.7% to 45,155, and the Small Cap Index tumbled 2.4% to 52,575, reflecting increased risk aversion among investors. Although Tuesday and Wednesday saw brief relief rallies, fueled by value buying and strong earnings from L&T, the overall tone remained cautious throughout the week. Let's take a look at this week's key economic updates. India's GDP growth forecast was raised to 6.4% for both FY26 and FY27 by the IMF, up 20 bps and 10 bps from earlier estimates, supported by strong consumption, resilient public investment, and a pause in expected tariff escalations. The inflation outlook also improved, with the IMF now expecting it to ease to 3.7% in 2025 and 4% in 2026, mainly due to falling food prices. However, India's manufacturing momentum strengthened, with the HSBC India Manufacturing PMI jumping to 59.1 in July, marking the highest level in 4 months. Globally, a PMI reading above 50 continues to signal expansion, indicating that India's manufacturing economy remains on a strong footing. New orders rose sharply, driven by robust demand and effective marketing, with the pace of sales growth hitting a 5-year high. Among this week's top gainers, GET&D gained 13.6% after delivering a stellar Q1. Net profit jumped 116% year-over-year, on 39% revenue growth, supported by wider EBITDA margins and strong order inflows. Kaynes Technology rose 12.6% as net profit surged nearly 50% year-over-year, driven by robust margin expansion in its industrial and ODM segments, backed by a healthy order book. NetWeb Technologies added 8.5% after doubling its Q1 net profit amid surging demand for AI infrastructure, highlighting confidence in its high-performance computing capabilities. On the downside, the top losers, PNB Housing Finance, fell 23.0% after the sudden resignation of CEO Girish Kuski triggered investor caution, despite the company's assurances on business continuity. IIFL Finance declined 19.3% as Q1 profit dropped 19%, weighed down by higher credit costs and margin pressure across its gold loan and lending portfolios. Mangalore Refinery slipped 18.4% after posting a Rs 272 crore Q1 loss, driven by weak refining margins and reduced crude throughput, impacting sentiment in the energy space. In the unlisted space this week, Boat made headlines with its expansion into the UAE, marking its first global move and reflecting ambitions to become a global lifestyle brand. BlueSmart filed for insolvency, citing governance issues and mounting debt, raising concerns over the sustainability of the EV ride-hailing model. NSE lost its global leadership in derivatives trading to Brazil's B3, as confirmed by CEO Ashish Kumar Chauhan, marking a notable shift in global market rankings. Eat Club Brands secured Rs 185 crore from Tiger Global, signaling investor confidence in cloud kitchen models despite rising competition. Navi Technologies raised Rs 170 crore in debt, highlighting sustained appetite for capital as it scales its digital lending business. Unlisted companies drawing high interest this week include Boat, BlueSmart, NSE, Navi, and Eat Club Brands. That wraps up this week's market highlights. Here's what to watch in the week ahead. Markets may open cautiously as global trade tensions resurface, following sweeping tariff announcements by US President Donald Trump targeting 69 countries. With global risk appetite under pressure, investor sentiment may remain volatile through the week. Domestically, the RBI's monetary policy decision on August 6th will be the key event, with possible implications for banks, NBFCs, and rate-sensitive sectors. The Q1 earnings season continues at full pace, with major names like SBI, Tata Motors, LIC, Bharti Airtel, Adani Ports, Hero MotoCorp, Britannia, and Titan likely to trigger stock-specific movements across key sectors. On the macro front, markets will track India's services and composite PMI data, August 5th. The RBI's policy announcement, August 6th. Globally, investor focus will be on China's Caixin Services PMI and trade balance key US data points, factory orders, ISM Services PMI, and weekly crude inventory levels. These indicators will offer cues on demand momentum and inflation trends, shaping investor expectations in the near term. That's all for today. Stay connected with Tikona Capital for more insights and wealth-building opportunities from the themes of the decade. Explore more on tikonacapital.smallcase.com to know more. Don't forget to like, comment, and share. See you next week.